Well, long-time listeners of this channel will remember that for much of my time here on YouTube, I have spent dedicated to following the economy and more specifically financial markets from time to time. And with all of this uprisings and civil unrest in the country, I haven't really had time to focus on what's been happening on Wall Street. Now, you might think that, our cities are burning and there's, Americans are at each other's throats and there's all of this disarray in our society. This must be terrible for the stock market, because they would, you'd think they'd be concerned about the U.S. economy, especially since we're already in a recession since February, according to the government. But perhaps to the surprise of many, if you take a look at the charts, stock market is at all-time highs. The Nasdaq in particular broke 10,000, which is that's a big milestone for the index. If you look, there's a little bit of a blip on the chart, which was at the start of this whole recession, but then now we're just straight back up and at all-time highs again, as if nothing has ever happened, even though so many of these companies are not doing well. They are not going to be making as much money because there's just not as much of an economy. We have the highest level of unemployment ever since the end of World War II, and in fact, the bullish jobs number that we got last week, which showed that a decline in unemployment from 14.7% down to 13.3%, was debunked by the Bureau of Labor Statistics itself, which said that they concocted a faulty survey in which they counted about 5 million people who are actually unemployed as employed. And this error alone would have actually increased the unemployment rate all the way up to 16%, or maybe higher, because this is just the one big mistake that they're telling us about. Who knows however many other little mistakes they made, which would add up and contribute more to the unemployment rate. And of course, that's on top of the already very tortured way that they calculate the unemployment rate to begin with. Because, of course, the unemployment rate, as it's calculated since, I believe it was like the early 90s, 92 maybe, is very different from how it was calculated previously. And, of course, this new unemployment way of calculating the unemployment rate makes it a much lower number than it used to be. And so we can't even really compare, 10% unemployment today to 10% unemployment in 1980, because, that 10% today is actually much worse than it would have been back then, because the number is so understated. And even with all the changes that have been made to try and deflate the unemployment rate, the raw number itself is higher than it's ever been. But yet, that seems to be positively correlated with the stock market. As the unemployment rate spiked, the stock market went to the moon. And supposedly, the efficient market hypothesists tell us this is because the market is pricing in the recovery already. The recession is baked into the cake. Everyone knows that that's going to happen. So what they're doing is they're front-running the stock market in anticipation of the very rapid recovery, because, this is going to be a short recession. Even though all these people who were saying the recession is going to be short a few months ago were saying there couldn't be a recession, it's the greatest economy in American history, all of this nonsense. Now that we're actually in a recession, or depression, depending on how you want to look at it. Of course, people are so afraid to use the D word. Trump couldn't even say it on TV the other day. He was saying, I'm not going to say the D word. Now we're supposed to believe all these people when they say, okay, well, there is a recession, but it's going to be really short. Don't worry. It's going to be like, 6 weeks, and then we'll be out of it. Well, that's the way that, recessions used to be back in the 19th century. When we had them more frequently, we could have, very, very short recessions that would just very quickly reprice the market and, bring things back in balance. But because we've been running so hot for so long, for a whole decade, and we never really had the correct the real crash after 2008, the market was not allowed to properly crash and reprice assets. the Fed did everything it could to just keep the bubble inflated and then inflate a new one. Well, that means that there's a lot more kindling to fuel this forest fire. And in order for the economy to ever come roaring back, as people say, it needs to be burned off. And of course, if the firefighters at the Federal Reserve, the architects of this relief rally, decide to just, put out all the fires like they are right now and just dumping, QE, free money into the market to keep things up, well, then none of that chaff can ever get burned off. And so all of these imbalances will be like an albatross around the market's neck that will, prevent the U.S. economy and actually even the equity markets from growing at any real rate. We will, of course, be left, with nothing but economic stagnation, which even in and of itself, is, you can say, okay, well, we're not going to have apocalypse. We're not going to have a total collapse of the U.S. economy. But that's not bullish for stocks. That would mean that stocks are going to stay about the same. If you have a massive bubble that pops and is then, stabilized by just unlimited QE forever, well, you end up with Japan. What Japan had, their stock market peaked out in like 1991. They had a big crash, and then the central bank said, no, we're never going to let that happen again. And so they've been dumping QE into the market. And so what happens is they stagnated. Prices in Japan are essentially fixed. There's no real price discovery. And that's where we are right now in America. It feels good, in the short term because, it's making things go up. But, recent monetary history shows us that just can't be. It did not work in Europe. It did not work in Japan. So why would we have so much hubris as to believe that it will work here? And even if it did work, how could anyone, I guess, unless they're just a, normal, cynical, greedy person, come out and support this? How could the Federal Reserve, support publicly just dumping money into the stock market to deepen the wealth of the already very rich people in this country? How could they look at ordinary Americans and say, yeah, I know that you have no job and that the unemployment rate is higher than it's ever been and that these are really, really tough times in America, but, I'm focused on making sure that rich people still make money. Honestly, it's a shame that there aren't more intelligent people leading, this whole, riot protest movement. Well, I guess they are intelligent, but I should say that people who, who don't really have an economic focus because, you would think that with all this going on, there would be some kind of, Occupy Wall Street 2.0. And of course, once a Democrat gets in, you'll probably have some kind of Tea Party type of thing, although I don't think that Joe Biden really has the greatest chances of being elected, but, putting that aside. Perhaps there's just too much going on right now for people to really be concerned about what the Fed is doing and about how unfair of a system that we live in right now. But I guarantee you that people are feeling its effects even if they don't understand it. And in time, the anger and resentment over what is being done right now will grow. That is, unless the Fed, actually fails in the meantime, which is quite possible. People act like that if there's going to be a market crash, it's going to go straight down. And the fact that there's been this massive relief rally off of the lows would indicate that the market can't really go down from here back to, for a retest of the March lows. And while this is, certainly greater than what people would consider to be a bear market rally, since we are now at all-time highs again, when you factor in the incredibly unprecedented actions by the Fed, it's possible, in the way that I look at the world, if if it's normal to have a bear market rally that has a retracement to the about the 62% retracement level. Well, when you pile in unlimited QE on top of that, when you pile in the most extraordinary measures taken by a central bank in U.S. history, it seems conceivable to me that a bear market rally could produce new all-time highs. But as you reach new all-time highs, there's always a risk of of a correction, of a sell-off. Once things get that high, just from a technical perspective. And I'm not a market technician. I normally outsource that sort of thing, and I like to read what other people have to say about that. I think I study enough of this stuff, and I have my own niche. But the way that previous all-time highs are always formed is that you make a new high, and then you go down from there, and then that becomes a peak. And so it's not like these. We've stayed at the, consistently making new all-time highs every day since the last, for over the last couple months or whatever. No, you make new all-time highs, you go down a little bit, and then normally you'll go back up. Though that's the, the normal operations, of the market. It moves up and down day to day. But considering how vulnerable the market is right now, how one-sided it is, how complacent the market has become, if we do have a sell-off in the wake of these all-time highs, just how well will this market weather it? Well, considering that this whole relief rally has been a series of gaps. Is the market going to be able to find support at a reasonably high level if there is a pullback, or once that pullback kicks off, is it possible that it will just accelerate, and that perhaps we will see an unwinding of this relief rally just as quickly as it took off? As much as I recognize that the Federal Reserve has effectively subordinated all fundamentals to their whim, and that they can suppress the role of fundamentals in market prices, let's say indefinitely. I'm sure that there's going to be an end to it at some point, but we don't know when that point is. The Fed, from what I've seen in the past of monitoring markets, has yet to subordinate technicals. And so when the Fed suppresses fundamentals to such a point that they goose the market so much to create this very unstable structure, they essentially are eroding their own ability to control things. Because even though they have a grip on the market for now, the higher that they push it, the looser that grip becomes. That's why every time the Fed announces a new action, it has to be bigger and bigger. It has to be more money. It used to be that $1 trillion was a lot of money. Now, that's just a Tuesday. The Fed's balance sheet is, around $10 trillion now. And, it won't be long before it hits $20 trillion. Every trillion comes faster than the last. And people like to say that there's no inflation in the American economy. Well, there is plenty of inflation in asset prices, and the efficacy of the Fed is a good example of that. The reason why the Fed keeps having to dump more and more money to maintain control over the markets is because they are quite literally devaluing QE. They're devaluing the dollar in the market. If the Fed is printing money to make the stock market go up, well, then by definition, the dollar is depreciating against all of these risk assets. And so therefore, to affect the price, the Fed is going to have to continually print more and more dollars. So I guess to conclude things, now that we are at all-time highs once again, now I think is when I'm probably going to start following the markets on a day-to-day basis again. I've been pretty much checked out because I was, after we passed 2950 on the S&P, which was a major resistance level that a lot of people were watching, I decided to just check out because it seemed like this thing was on a total mania going to the moon. And so it was going to take something big to change that momentum. And this is the first real indicator that I've seen that we may be approaching the end of this rally. All the signs are there. Put-call ratios are absolutely absurd, and there are, of course, no bears left anywhere. So with that said, if you gain anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe because I do upload every day, and I'd hate to have you miss one. So I'll see you folks back here tomorrow.